You were listening to chartingwealth.com for Tuesday, the 12th of May, 2015, and we start off, as always, with IYY. If you are watching our video, you can see IYY for the 4-hour chart is what we're starting off with, but that is not correct. We always start off with the 2-day chart. And what do you see on the 2-day chart? Well, you see the 2-day trend line that was broken over the last 2 days. However, if you look down below, you will see that the derivative oscillator is continuing to grow, and the MACD crossed over going down around the 30th and has continued to move down. It has not crossed over going up. What does that mean? Well, that's interesting. Let's drop back to that 4-hour chart we originally started with, and what do you see? Well, you see what happened on Friday, the 8th, and then you see what happened on the 11th. Appears that it topped out and is starting to move over. Now, the 4-hour chart crossed over on the 8th and is still going up, as is the derivative oscillator, but we use that to give us some idea as to what's going on a smaller chart, the half-day chart, which is a quarter the size of the 2-day chart. But we always have to look back at our big chart. We talked about this on Friday. We didn't have a crossover going up. We had some movement toward that, but we always watch the big chart. Now, it has broken our 2-day trend line, but we don't have any confirmed up movement as far as our MACD goes and our derivative oscillator. So we're technically still in a down move even though the market is up. But if you look back to, what is that date, the 30th, it has not approached even that yet. It has not passed what the up movement was. Well, actually, the down movement was where the market started on that 2-day chart on the 30th and went down. So we'll continue to watch what's going on. 2 days does not make a market change. Now, let's go ahead and switch over to the SPY. What is the SPY? Well, that is a Standard & Poor's 500 big companies. What do we see there? We see the same thing except an even stronger up move. But again, what do we see here on, well, the MACD has actually, looks like it's actually crossed back over going down. Is that not bizarre? And the derivative oscillator is stronger. However, the candle going up for the last 2 days is stronger. What is actually going on? Well, let's break that down and look at the 4-hour chart. And what do we see? Well, we see a strong movement up on Friday, and then we see a movement down over the course of today. In fact, the market, or the SPY, the S&P 500, is actually down 0.48%. Total market down 0.39%. So we are technically in a down move, even though the short chart is up. Now let's look at the Qs. What's the Qs? Well, that is the NASDAQ 100. That's the tech stocks. It is barely crossing over as far as the 2-day trend line goes. It is actually in a down move, having crossed over between the 4th and the 6th on the MACD, the moving average convergence divergence. And in fact, the derivative oscillator has even strengthened on a down move today. And it is technically in a down move on the 2-day chart, even though we have seen some up movement today. If we break that down to the half-day chart, we can see the same kind of thing, a movement down this morning and what we call a doji this afternoon. A lot of indecisiveness technically on the short chart, the 4-hour chart. It is in an up move, but again, we use the 2-day chart to give us our trends. We like the 2-day chart. It's a bigger wave. That's what we look to. Now, lastly, what do we look at? Well, we're going to go to gold. And gold is continuing to move down. It is starting finally to cross over going down as of today. If you've been watching or listening to us since sometime around, the 8th of April, you've continued to see us talk about the movement. We have continued to technically be in an up move until actually Now, even though the market has been trending sideways and down, the derivative oscillator did rotate over around the 24th going down, but we've drawn a trend line and have consistently stayed below that over the last several weeks on gold. Nothing really pushing gold up strong. Let's drop back on gold and look at the 4-hour chart. We're waiting for that to load up. That's loading up very, very slowly for us. Having a little bit of trouble there on the 4-hour chart in gold. But of course, what we see in gold is a continued down movement, crossover going down on our 2-day chart. That is where we stand on gold. That is where we stand on, of course, the Qs. Again, down moves on those large indexes, both the Qs and the SPY, and pushing down going on the SPY, the S&P 500. So when we're looking at our 3 big charts and gold, we're seeing overall down movements on those. Now, those are in the long term, our long-term charts. We will continue to watch as things move ahead and see where the markets take us. But it is interesting to watch as there is some push to try to drive the market up. But again, remember where we are. We have gone out of the 6 big months. April is the end of the 6 big months. We have now gotten into May, and you have heard the adage, sell in May and go away. I bet we've said it 100 times here at Charting Wealth. What does that mean? It means that so much of the money typically leaves the market this time of year. People sell in May and go away on vacation. The big money many times leaves the market, which means lower volume, which means a lot of ups and downs and sideways movement. We will see a lot of that throughout the course of the summer. Our job is to see what we can chart. If we can chart, we chart it. So I wish you the best of trading. Thank you again for listening. If you want any of our training, any of our tips, any of the things that we talk about, both our weekly review at the beginning of every week and our daily review every day, please go to chartingwealth.com, sign up for the email, get our charting layout at freestockcharts.com, start following the markets, learning what it's all about and what you're doing, and hopefully you'll get into investing. You'll find yourself be very successful, and you will absolutely love it. There are few things that are more fun in this world than being able to accurately chart the stock market, indexes, commodities like gold and such. We wish you the best. Good trading, great investing.